the food carts, the doubles vendors, the gyro vendors. I mean, we all know you have to get your food badge. When it comes to tax now, maybe how do you prove profits and sales, and how do you pay tax on that? And especially for those who, singers and whatnot, how do you prove that income, and how do you pay that income proportion to your tax?
Well, for starters, all these individuals would require to pay income tax. What they would have to do, they have to keep some records of their sales and expenses. So whether it is as an entertainer, you may keep a record of everyone that gives you a check for performance. Maybe you make a copy of it. You make a little note that in this what you see from this gig, whatever the case may be. Maybe as a doubles vendor, whatever is daily cash. You take in, you make a little note of that, and then you deposit it into your bank account. For these small business owners who may be trading as like a sole trader, they have to look out for a couple of things. One of the taxes that they will be liable for is something called business levy.
Okay.
And business levy is a tax on their gross sales. Okay. So whatever amount of income they made, it's a tax on that. So for the new year 2016, that tax was increased. It's now 0.6% of your total sales. 2015, going back, it was 0.3%. Now business levy for the persons as sole traders, you have some exemptions. So if your business, within the first 3 years of commencement of your business, you're not required to pay business levy. You get exempted from business levy. But after 3 years, you have to start making that deduction. You also, as I mentioned, you have to keep that record of your income and expenses. And when you obtain your profit, then you would look at whether or not that profit is more than your personal allowance. So let's just say you had $250,000 in income, and you had $150,000 worth of expenses. That's $100,000 profit, and your personal allowance. Let's say this was 2015, and your personal allowance was $60,000. Essentially, your chargeable income is $40,000, and you're going to pay taxes 25% on that $40,000.
Okay.
So you'll pay a tax of $10,000. There's a myth going around that persons always say, don't get registered, don't get part of the system because the government going to take all your money in taxes.
Yes, right.
The government taxes profits. So to start off to be paying income tax, you have to be making money. Over your expenses, over your personal allowance. So there's no need to be afraid to become registered. More importantly, for individuals that's really serious about taking their life to the next step, when you operate under the radar unregistered, you have no declarable source of income. So you have this money passing through your bank account, but what is it from? You can't go to the bank and say, well, I have filed income taxes for the last 3 years. My average income is X amount of money. I want to use this now to go and get a mortgage. So while you may look right now and say, here's what I'm unregistered, I'm making money, what is the end goal? How are you going to obtain that mortgage? How are you going to obtain that car? There's so many things that people start to now look at to decide, here's what I need to become registered. And I also need to do the right thing, because at the end of the day, we have so many things happening. We have the government cutting back on many things, and it has a lot to do with that their revenue is nowhere close to their expenses. And we all have to play our part in paying our taxes. I just gave a scenario of someone making $250,000, making $150,000 expenses, and the tax came down to $10,000.
Okay.
Right? And most small business people don't even make that amount. So if you revise those numbers downwards, it may actually mean that you are probably not even paying any taxes or paying something that's even minimal. So to try to cheat the system, because by cheating the system, you're cheating the nation. Because the government doesn't get this revenue. The government can now redirect this revenue to the most needy in society. They cannot use it for its social programs. They cannot use it for the gate. Many other things that they do that add significant value added to society.
Right. So it's nothing to be scared about to get registered and pay your taxes. All right. And for all those, what's the date again until this Tax amnesty is over?
The 16th of September.
16th of September. So, yes, I know, get all your bills ready. And what form do you have to go to fill out? TD4?
No, well, a TD form would be for an individual.
Right.
So, for a person who may have both emolument and non-emolument income, that's basically emolument being income from when you have an employer, non-emolument being things like rent, I mean, all different types of income, trade, those certain things. Basically, for a individual, there's a form, 440 form. You fill that out for a limited liability. There's a 500 form. And basically, you would use those forms. I usually tell persons to try to seek some advice from someone who's competent, because a lot to do with filing your taxes has some things to do with accounting. So, you know, you may do some things. People may think it's as simple as having an income and expenses. And I'll give you an example I gave someone today. So a small business owner may decide, I purchase a TIDA, 75,000. My income is about 200,000. That TIDA for 75,000, that 75,000 is an expense.
Okay.
And they, as a layman, you would say yes. So you take that away. Essentially, that's not an expense. Essentially, that TIDA is something you're going to use for several years, and it's something in accounting you will depreciate. And even for tax purposes, depreciation is not allowed. It's something that they allow you a wear and tear allowance. So you're allowed now not to claim that 75,000 in any 1 year, but 25% of that 75,000 in the first year, and whatever that whatever that reduces down to be, you get the next 25% of that amount, and that's how the wear and tear allowance works for that, whereas how you deduct it. But someone who may not know that may just deduct the 75,000, and maybe sometime in the future they may get an audit, and the Board of Inland Revenue will say, well, this is not how it's done. We have to fix this. They add it back and they say, well, you are now owing us $25,000 because of that mistake.
Oh, do you offer those services though?
Yes.
Oh, okay, nice. I know we are under about 2 minutes. Just quickly, please tell me, there are terms being they're being used: cash flow, burn rate, and break even. Just in under a minute, is it possible you could tell me what those terms mean? Cash flow, burn rate, and break even.
Okay, cash flow is really popular among banks, right? In fact, when you're opening an account right now, one of the things for new business, one of the things bank will ask for is the cash flow. They kind of want to have an idea of the income and your income and expenses, and that has a lot to do with they kind of having an idea of the type of client you're going to be. But more importantly, they also use it for something for the Proceeds of Crime Act. They kind of have an idea of what activity is going to be unusual. So if you say, well, I'm going to make about $3,000 for the year, but then I see a $2 million deposit into your
What's going on? Hello.
Flagged financial and intelligence unit, those sort of things. Break-even point, I think you...
Burn rate.
Okay. All right. So the burn rate will have a basis. For example, it will depend. You have a burn rate for different things. So let's say, let's look at it from a working capital standpoint. So we have $15,000 a month that we usually spend, right? It's important for us to be able to identify the type of money that is going to be used up in the business each and every month. If we don't know that, we don't have something to identify. Here's what: if we have $150,000 in cash, how long is that cash is going to last? How long it's going to take to burn out? All those things are important for a small business owner to be able to identify. So I have cash, because at the end of the day, cash is king. You can be making profits, but not necessarily have cash. And if you have no cash, you can't make any bill payments. You can't pay for whatever you may need. So you have to pay particular attention to cash when it comes to a small business.
And I believe break-even is self-explanatory when we speak about finances. I want to thank you so much, our guest this evening, Mr. Junior Ramsing. Thank you so much. and of course Mr. Richard Oliver, Mr. Junior Ramsing of Financial Advising, and of Mr. Richard Oliver of Firstlink Business. This was Building a Legacy right here at 103 FM, an initiative on RGP Live TT and 103 FM. Join us next week, Monday, at the same time, same place, for another exciting edition of Building a Legacy.